So let's focus on trend, right? So I went through some of your Fibonacci retracements drawings are okay, but they just need a little modification, right? So, and to do that, you need to really understand um, where the market has been and where it's going, right? And the best way to do that is to recognize the highest point and the lowest point of the chart of what you're looking at, what you expect, what you're looking for, right? So in this case, this is the highest point in this chart, yeah, and this is the lowest point, right? This is the highest point and this is the lowest point. And looking at the trend here, this is a clear high, all right? This is a clear, okay, this is a low, right? This is another high, right? This is another low, this is another high, or let's say we can call this is the next high, which brought about this next low, which of course, there is no reasonable, you can't call this another high, yeah? So the same way from, if this point is the highest point, right? The next low is this. So it's basically, I think this is the best time to use this guy. So it's basically one, right? Two, right? Three, the lowest point, right? Then this. So we have high. Are you seeing this cursor going around here? Are you seeing it? All right, all right, all right. So we have high, low, high, low, high, low. All right. So our next high, our next high is what's our next high now? Let me see. High, low. So our next high should be lower than this one, right? Our next high should be lower than this one, but can this one, two? I can actually call this the next high, right? The market went up, came down. Then the next high I can count is this basically, or this, which apparently is somehow higher than this, right? So let's call this the next reasonable high here. Let's call this the next reasonable high. This is a low, right? Then this, okay? Or you can still make, let me just paint this yellow, yeah? I want to tag this guy as your high, as your low, right? Um, this is your next high, then low, it's like the next high, low, then boo, 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 crazy moves, right? Exactly, exactly, exactly. So the thing that happened here is from this point to this point is actually a clear downtrend, right? From this point to this point is a clear downtrend. And what happened for a low to be valid, a new low needs to be created. So since this low here didn't break this particular point, we are seeing a possible change in trend, right? So what next? Of course, we have a high, right? Then this low didn't break this one. Because if this low would have come down here, that would signify the continuation of this trend. But what happened? This became the next high. Okay? This became the next high. So what I'm trying to show you here is when you see a change in trend, right? That's when you can start looking for, that's when you can start looking for your entry to join that particular trend. Okay? So let me clear this. So our focus now is when to actually draw your Fibonacci 2. Because let's say you've noticed that this is a change in trend. So, okay, yeah, I know it's a buy. When should I now enter for the buy? How should I know the best time to enter for a buy? Let's clear this. Yes, I need to clear this. Um, right. So we've seen, I'll mark this with, right. Okay, let me get, got it. Remember, this is a 1 hour time frame, right? So this is the low. That didn't break the lowest point. So apparently this is our new low. So our focus will be on this guy. So this is what made us say, oh, there's a possibility of this market going up, right? There's a possibility of this market going up. But what am I going to go? I'm going to go down to a lower time frame, right? 15 minutes time frame. That's what the market is telling me on the lower time frame. I'm looking for the best time to enter. I'm looking for the best time to go in for my buy. Lower time frame, lower time frame, lower time frame. What's wrong? All right. So what do I have here? On the 15 minutes time frame, this is a downtrend here. This low was not broken. So I would want this high here to be broken to actually know that, okay, this is actually an uptrend. So what happened? This high was broken. Now you can actually wait for, if you're watching this, if you're observing this, of course you want to take your entry on the 15 minutes time frame, right? You can actually mark out these points, right? This you can mark from here to get your pullback. But if you don't want to do that, simply look at this candle, this particular long candle. I'll call it the feather lookup, right? This is the area to consider. I'm just showing you where to look out for your entries, even without Fibonacci. Yeah. So I'll have this. This is the candle that broke the highest point. I'll allow that. This is what I'm looking at, right? I want the market to come in between. I want the market to come in between this area. You can see this candle and this candle, right? Any points between it, I'm good for my buy, right? Any point between this candle and this candle. Let me take this out. Let me expand this so you understand what I'm saying. Do you get what I'm talking about? Any point between this candle and this candle, I'm good to go, right? I'm good to go. If I don't want to go that way, okay, I'm coming, all right? Market broke it here. Let me push from this area to this area. Fibonacci retracement. Now, look at this. Let me focus on the Fibonacci 2 you want to learn. Yeah. The market broke this point, right? This is the exact price or where the market broke it. Now, if you want to get your entry points, remember you are focused on entry points, right? If you want to get your entry points, look for the last reasonable low before the market broke, right? That's going to be the beginning of your Fibonacci, right? And target the next high. Let's say the market was still here. Let's say we didn't know that all of these things will happen. We didn't know that all of this move will happen. The market was still around here, right? I'm just gonna mark these low points here because this is like the lowest point before the market broke, right? This was the lowest candle before the candle that broke it. So I'm gonna mark my low here and my highest point here. My target is I need to enter this market anywhere below the 50% zone, right? Anywhere below the 50%. I didn't even know. Wait, did I draw this thing well? Let me check. 0 to 8%. I don't know if I draw this thing well. I want to, yeah, exactly. I want to get into this market from 50% below. I'm not interested in entering the market around this zone. That is something below 50. I'm not interested, right? I put this point because they are doing something for me. But I call this any point here, any point above 50%, I call it, and what's it called? Um, um, discount. I call it discount zone, and zones below 50% or beyond 50% and above, I call it the premium zone, right? You would like to buy at a premium price, okay, and not at a discount price if I'm to use that. You like to buy at a premium price, right? You want to buy, or you want to get a premium price of a particular thing, not a discount. You want to get the full price, yeah? So I'm not interested in any points here. So my interest is from this zone down 50% down, right? Of course, to at least 70 or 79. Anything down here, I think I can stay. Anything below this point, I can say, I think the market is now headed on that way, right? So imagine if I have that, I can set my buy limit within this zone. Or if I don't have my buy limit, immediately the market comes into this area, I go in straight up. Let's say I enter at this point. My SL, of course, should be somewhere. Let's say my SL. Of course, when calculating your SL, you should know your lot size, what you're looking at. Let's say my SL should be at least, I want it to be below this particular candle. Yeah. I just keep it there. Then my TP, if you're targeting 1:3, 1:4, you can push it 1:4, and you're good. What's that? Let me see your question. Please, what will be your sign that the market will change direction? This is the sign that the market will change direction. The market broke this high. This is a high that the market broke. The market broke it here. That's a sign that it has changed direction. Remember, we are looking at a downtrend earlier. I thought you've gone through those courses. All these things are in those courses, bro. I thought you've gone through those courses. All these things are in those courses. But anyways, let me break it down regardless. Remember what we said. This market was on a downtrend and a switch of trend occurred, right? So let's go back to 15 minutes. So this is our signal that that the buyers are now putting in momentum, right? The sellers are losing out, the buyers are taking in, right? So with this is your confirmation. So you don't just want to enter at this point. You want a pullback, which is a confirmation, right? That's why you need your Fibonacci tool, right? That's why you need your Fibonacci tool. And once it comes in, remember you are just depending on your risk. Let's say you're risking, what's it called? Let's say you're risking 1% of your account, or let's say you're risking 10% of your account. You have $10. You want to risk $1, right? This is it. I want to risk $1. This particular move, this SL is 6 pips, right? And for 6 pips, you need to go in with 0.1 will be $6. 0.01 will be 6 cents, right? 0.02 will be $1.2. If I'm right to all of this here, 0.02 will be $1.2, right? So you can just go in with 0.15. That will save you, all right? At least you know you're risking $1 of your account with the hopes to make times 4. That's $4. You're risking $1 to make 4. That means you're risking 10% of your account if you have a $10 account. So this is, I'm showing you two things at the same time: how to flip and how to flip with proper risk management, right? So taking this trade and it's a win for you is already, and it's a win for you. That's, you've made like 40% of your account. That is very good. $4, right? But if you want to have a higher risk, let's say you want to now risk 25% of your account. So you'll be using, for that $10 to risk $2.5, right? For these 6 pips, this is a 6 pips stop loss, and you're targeting 24 pips TP, right? For this 6 pips, 6.2 pips stop loss, and you're risking $2.5, it's just a little calculation, right? I hope you're writing this down. That's what I'm teaching you. I'm teaching you everything here now. So just be taking everything down, right? Just be taking everything down. Be taking everything down. You want to risk 25% of your account because you want to flip, right? With your SL here, let me delete this since we've gotten our entry. Your SL is 6.2 pips, right? So let's put it down. 6.2 pips. 0.01 lots, yeah, equals one, that should be, I think, 10 cents. 10 cents. Let me get my calculation right. Yeah. 10 cents per pip, right? 0.10 lots equals, I'm sure I'm getting this right. $1 per pip. It should be $1 per pip, right? Some of this calculation differs on certain brokers anyway. $1 per pip, right? Then one lot, yeah, equals, it varies on certain brokers. For some brokers here, one lot is $1 per pip. It's that simple. A lot is $1 per pip, right? So since you're risking 6 pips, okay, SL equals 6 pips, and you want to risk $2.5. Okay, risking $2.5. This calculation I'm giving you is just for Euro USD, right? Other currency pairs have their different calculations. This one, just because I've traded this for a long time, so I kind of understand the ways they move. The same thing goes for stocks indices that I trade. So if you're risking $2.5, the lot size you go in with is $2.5, 6 pips. So you can do the calculation, right? 0.01 is already 60 cents, right? 0.02 is already 1.2 cents. 0.04 is already 2.4. So the best thing you can go in for, what you should enter that trade with is 0.04 lots, which in general will equal you risking 2.4 $2.4, right? It's still good, right? You are risking $2.4 to make reward. Reward is simply, your reward is 1:4, right? 1:4, which equals 2.4 times 2, right? 2.4. Where's this something sign? 2.4 times 4, which equals you're in school now. 2.4 times 4 is how much? Is what? Hmm? Is what? Is what? Let me see how sharp you are. Don't press your calculator. 2.4 times 4 is what? Hmm? Hmm? You don't know the answer? You should know that offhand now, boy. Are you still on this call though? Are you still here? Drop a response. Let me know if you're with me. Hmm? It took you long. I think you press your calculator to get the answer. That was in your calculation. And you would have just look at it and give me the answer. But anyways, that's it. Right? So that is it. Okay. That is it. That is it. That is it. So this is how to actually this is how to do your calculation well. So you know the exact lot size you're going in with for any particular trade. So with this, if you actually took this trade, yeah, you literally flipped your account, bro. You literally made 96% of your account in one freaking trade. Okay, so what I'm showing you here now is everything all together. It's all about risk management and having a precise entry. Okay, it's all about risk management and having a precise entry. So you don't just go messing yourself up. Because if you go in with this energy like this, how can I flip? How can I flip? You blow your account. I've made that mistake in the past. And I wouldn't want you to make the same mistake. All right. So that is it about it. Okay. That is it about it. So here's another thing, right? Here's another thing. Okay, now when there's another way to actually get this, right? There's another way to get this. Still using your Fibonacci tool. All right. See, over time, depending on how long you're with me, I'll get to show you some things that you might see as uncomfortable, but they are very, very profitable. Okay. I call it adding to your positions. Um, it's a normal thing to add to your losing trade. Yeah, it's very normal. Oh, this trade is going sideways. This trade is going sideways. Okay, let me add more. Let me in hopes I can make more. Right. So it's best to actually know what to add to your winning positions. So, anyways, I believe you've learned something today. 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 So let me show you some other thing. Now, um, let's say you're able to notice that okay, the market broke this zone. So you are sure that this market is trending up. Now, to know that your pullback has started, right? To know that your pullback has started, all you need to now wait for is this. You need to wait for a low to be broken, right? And this is it. You need to wait for a low to be broken, all right? So for if as this low is I'm saying if you're looking at a broader view, yeah, if this low is broken, this is your indication that okay, this guy is now pulling back downwards. So you can literally draw your fibs from here. Let's see what this fib is going to give us. Let's see what this flip is going to give us. Boom. So what did he get us? It didn't actually get to our 50%, right? It didn't actually get to our 50%. So me personally, in this particular trade, let me go back to the 1 hour time frame. Right? So let's say I notice this change in trend on my 1 hour time frame. What I'm going to do, I'll draw my Fibonacci to this highest point here. If I just notice there's a new low, lower than, if I see a lower low, right? I'm going to draw my Fibonacci to the highest point, from this lowest point to this highest point. This is for a wider view, like you're waiting more, your waiting time is going to be longer, right? So I'm going to draw this, right? Since I have this here as my highest point, and the market came exactly at 50. In fact, let me see, did I get this well? Yeah, exactly. It touched 50 and disappeared. This is good, so good, but I would have preferred to go in within this zone. So what I'm going to do now is I'm going to use this point as my highest point, right? I'm going to use this point as my highest point, right? Now I'll wait for this market to get back within this zone. So by my next target zone is here. So by Monday, let's see how this area is going to play out. Let me have this zone here. And of course, have a potential long within this area as well. Let me just keep this here. This is okay. Let's say I'm targeting 1:4 still. So this is what I'll be targeting now. So let's see how it's going to play out by Monday, right? Remember, see, as you can see the chart, I'm not in the trade. I'm waiting for it to get back into this area for me to take my buy, right? So I'll patiently wait and see how it plays out by next week. All right. So of course we always have this session. Don't worry. So make sure you take note of all of this, right? Take note of all of this I've shown you today, right? Look at mark out. You can take a screenshot of this. You can see the prices. We'll monitor it together. By Monday, take a screenshot of this. By Monday, let's see how the market plays out. Take a screenshot of this. Or however it is, I'll show you by Monday or Tuesday, however it is. We'll see how this actually plays out. Okay. We'll have a forecast now. So this is what we are looking at. We're expecting this to happen. So let's wait and see. All right. All right. So I believe you got something tonight. The main thing now is to practice. Yeah. Practice risk management. I don't even expect you to get it once, right? It took me quite a lot of time to actually have a grasp on it. Yeah. So it's all good. It gets better. We'll have this session again. In fact, we'll have lots of them, right? I want to make sure you grab this and you have an assignment by Monday. I want you to draw, just do your own analysis. Give me a Fibonacci retracement you did so that we'll see. Okay, we'll see. Give me, what if I have $3? $3 is very, very low. Loss size, yeah. If you have 0.001 is the lowest loss size you can use. It depends on your risk. It depends on where your stop loss is. $3 is too freaking small, but it can still do something. You just have to have a minimal stop loss, right? So that if the market hits your stop loss, you're not losing your whole account. So it's still not bad. It's still not bad. You can just risk $1. You can risk $1 and anything is possible. Anything is possible, right? So cheers and all the best, brother. Cheers and all the best. See you soon.